Hey everyone, welcome to Alpha Insights. I'm Kurt.
And I'm Allison. Today we've got a fascinating topic on our hands. SanDisk, or SNDK, and how it's riding the AI wave.
Absolutely, Allison. Let's dive in. SanDisk has really been in the spotlight due to this surge in demand for high-performance memory, mainly driven by AI and data centers.
Right! And it's interesting that despite this momentum, they still report a negative earnings per share. That raises some eyebrows, doesn't it?
Definitely a red flag. The stock is currently sitting at about $377, which makes investors consider if the valuation matches this high demand.
Speaking of valuation, their market cap is around $55 billion, but analysts are cautioning about falling average selling prices, or ASPs.
You nailed it, Allison. Falling ASPs could indeed hurt profitability if they drop too quickly, especially with the high capital costs in memory manufacturing.
Exactly. And while they've seen strong revenue growth recently, like that $2.31 billion in Q1 2026, it makes you wonder, can they sustain this level amid potential downturns?
Great point. It's like riding a roller coaster. There's so much excitement, but also uncertainty. The risk of margins compressing is very real.
And let's not forget the upcoming earnings report on January 29th. That'll be a major test for investor confidence, especially in light of how they guide on revenue and margins.
True, their earnings will reveal a lot about the durability of this AI-related demand. Analysts have optimistic price targets out there, but there's a lot of skepticism too.
Yeah, some analysts are sitting at a target as low as $135, while others are a bit more upbeat, looking at an average around $265.
And with all this volatility, investors really need to tread carefully. It's one of those situations where momentum can quickly turn on a dime.
Exactly. If you're a long-term investor, they suggest accumulating shares in the $250 to $280 range. But being cautious is key.
Right, it's a balancing act. And short-term traders should keep their stops tight, given the parabolic moves we've seen. It could swing downward just as fast.
Agreed. So much hinges on not just the earnings themselves, but on how the market reacts to them. The tech sector has seen some pullbacks lately.
Absolutely. It underscores the importance of risk management, especially in a high-stakes environment like this.
What an exciting time for investors to be paying attention to SNDK. There's potential, but also a minefield of risks.
Precisely. To sum it up, keep an eye on earnings, be aware of the valuation risks, and consider strategic entry points to mitigate some of that volatility.
So true. Thanks for unpacking this with me, Kurt. It's always a pleasure.
My pleasure, Allison. And thanks to all our listeners for tuning into this episode of Alpha Insights. Until next time.